Good morning, everybody. How's everybody doing out there? If you're with me on this wonderful Wednesday, go ahead and please drop an emoji here in chat or say what's up, either on YouTube or Discord. Let's see who's with us this morning here. Hey, good morning, Smoof. We are not at that daily profit right now. Take that away. We haven't even started yet. What is our total net profit? There we go. Hey, Eku, good morning. Tony, Trader Pixie. Hey, Shane. How we doing? So no trades yet. Hey, Jay. No trades yet, obviously. Sometimes there will be a time and a place where I will start the stream and I will already have a trade on, but so far I haven't done that yet. So good morning, everybody. Happy Wednesday. Let's talk about what we have on the docket here for today. Today's actually going to be pretty light in the way of news here. Is this thing really whipping around that much? Wow. Yeah, I suppose it is. Just looking at the 30-second chart here. Yeah, this thing's whipping around like crazy. If we look at the E-signal here, I'm going to drop this down to the 15 or the 5. Yeah, look at this whippy mess right here. We are just kind of banding around between 46 and 78 here. Pretty scalpy. But overnight, wow, we had a tremendous move to the top side here. From these lows down here, we had a big, tremendous grindy move here to the top side. This dashed line right here on my chart, that signifies when Globex started. That's at 6 p.m. New York time. And you can see basically from this area on, that was the lows here. And then it's been grinding and grinding overnight. And it almost peaked up back into 14,800 here. Hey, good morning, Discount. Yeah, it's been grinding higher and going back into these levels here. So we are kind of Loctite in between these levels. As a futures trader, you really have the option when you're looking at, the liquidity and how it's been transacted through these areas. You have the opportunity to kind of look through and see if you want to be a big picture trader or if you want to be more of a scalpy trader. And what I mean by that is that when you're looking at this big pocket of liquidity here, well, you could be looking to take a trade from that area down to that area, a big picture trade, or you could be looking to take a trade, from here to there. Right now, Neil Kashkari is speaking, I believe, on CNBC. Yeah, he's on CNBC right now, so he is the one who's moving the market. At 8:30 here, we do have a little bit of news coming out, but it's just not that important. I mean, it's a little bit, it can move the markets, but if we're ranking it from 1 to 10, 10 being the most important type of news that can come out, I'd put this at about a 2. We have 2 prints that are coming out. We got the preliminary durable goods orders and the capital goods orders that are coming out. So, we've seen those prints move the market before, but I mean, if we're focused on trading the NASI here, it's really not going to be moving the market all that much. But let's see. I'd love to be pleasantly surprised. I always say this all the time. I love to be pleasantly surprised by the market. So if the market's going to give us a great surprise here, hey, I'm all for it. But for the time being, this could be one of those streams where we don't have many trades or executions because look at this. We are just chopping. This is a 2-hour period here of chop. I mean, given it's a pretty wide range here. We're talking about just over 30 handles here in this range. But to think that, unless I'm making a market or being super scalpy, it's going to be difficult to get off a trade here. So I'd really like to see it either push out of this range or tap the low end of this range, and maybe we can hit a long off the low end of the range. So if this was to drop, 10 or 15 handles from here and we saw it show some strength here at these lows, this is what I'm talking about right here. If we come back down to that level right there, my worry and my concern is that we're just going to be chopping tight in between this little pocket right here. So Neil Kashkari speaking right now on CNBC. Couple comments coming out here. Saying the neutral rate may have ticked up. We're allowing the data to come to us, whether or not blah, blah, blah. Same old Fed speak. If Neil said anything groundbreaking here, we'd probably see the markets move. But I mean, this Fed speak lately has just been a broken record. It's been the same stuff that we've been hearing over and over and over and over. So might be a pretty calm and docile stream. I see there's 19 of you folks in here and we only have 7 likes. I want you guys to push that up to 10 likes at least. Go ahead and hit that thumbs up button down there at the bottom. I want to see us get up to at least 10 likes. Just click that thumbs up there. Hey, it's free to click, right? your most cheap click of the day if you're a trader. Otherwise, you trade futures. The moment you click a button, you're paying commissions to your broker. In the case of Top Step, it's like $2, $2.50 every single time you click that button. So just looking here, I mean, boy, it could just be a really slow and sleepy session. We are 22 minutes away from the news being released. But yeah, today's session, I'm guessing, is going to be a lot about positioning. Not guessing, but I would assume that most of the session is going to be focused around today is going to be positioning of larger players into the quarter end rebalance, which of course is coming on Friday. And that should be interesting. It should be a lot of fun. But with no news today, we had this kind of on Monday. We talked about this in the morning call in Clubhouse. And basically, when you have days like today, it's very much like what we saw on Monday. Let's go ahead and look at Monday's session here. So Monday's session was this one right here, 25. Very choppy and gross. Let's see. Yeah. Not a lot of movement compared to yesterday's session. Yesterday's session was extraordinary. I mean, you have this massive move here. About a 1.5% drawdown there. But yeah, Monday's session was pretty sleepy and docile. So do we see the same thing for today's session? That is TBD. But with not a lot of news being released, could have a lot of traders patiently waiting. And why? Because tomorrow's news is going to be so important. Tomorrow's data releases, we have the GDP economic accounts. We have the jobless claims that come out every single Thursday. We're going to be trading that on stream tomorrow. So GDP and jobless claims. And then at 10 a.m., we have pending home sales. So that's going to be important. That'll move the markets here. At 11, we have the Kansas City manufacturing activity. But yeah, Thursday, we have a lot of speakers as well. I know Neil Kashkari is speaking right now, but he's saying things that are very much Kashkari-esque. He's not really divulging much about what's going on right now. They're just kind of saying the same thing over and over. We got to wait for data. We're data dependent. We're in a data dependent cycle. We're waiting for the data to catch up. Data. That's all they're talking about. He hasn't really said anything new. The real shocker, the only big shocker that came out from the Fed recently was the S&P dot plot. And that's what I think kind of blew everybody's hair back here. The bears were able to celebrate on that one because it basically said that, we've been telling you that in 2024, we're going to be dropping rates. And now if we look at the S&P dot plot, it's suggesting higher for longer. So it was not really the report that most people were expecting. And it ended up making the markets sort of have more pressure on them to the downside, and it allowed the bears to maintain control of what we're seeing today. And until something shifts in that narrative, I think that we will kind of see these bounces and continued bleeding to the downside. And it is really contingent upon whether or not there is anything that comes out and changes things. So I think that we're going to have these little pops like we do. This is where you have, big pop to the top side here. And then we'll just continue back down to the downside. Jay says, very reactive, not proactive. Why do we need them? Yeah, I always say, I've talked about this on the morning call quite a bit in Clubhouse. But I just say, if we would have came out in January and we would have raised rates insanely high, very restrictive rates, very restrictive policy, we would have had a minor crash in the economy. Maybe it would have been could have kicked off a massive recession. But I think that the dust may have settled by now. And I think that the economy would be in a much better place. There's a lot of different metrics that could be argued too. For instance, savings. We're looking at savings being depleted right now for the average consumer. Is the average consumer taking their money out of savings and putting it into vehicles like T-notes and T-bills? I mean, it would take a savvy consumer to do that, but it doesn't mean that depleted savings doesn't mean that they're putting their money into different vehicles. Because savings accounts are, I mean, there's so much information out on the internet, anywhere that you look, where you can find out that keeping your money in a savings account is a bum deal. You're not going to get a good rate on your money. There's better rates elsewhere, and it's easily accessible now. So is seeing the metrics of having consumers' savings being depleted, is that a leading metric that we should be looking at? Credit card consumer debt being high, is that a metric that suggests that people are necessarily going into debt, or are they being wise with their money when they're, maybe paying off their debt slowly because they're seeing the value in borrowing that money or accessing their credit? There's a lot of different arguments that can be made about a lot of these metrics that we're looking at here. The fact of the matter is that home prices are still holding. Buyers are still there. They're building new homes. And that's why I'm interested to see tomorrow. Tomorrow we have, I think it's pending home sales, right? Yeah, pending home sales for August. So that's going to be a metric I'm going to be watching tomorrow. Unfortunately, we're not going to have that on stream because that's coming out at 10. The stream here is daily from 8 until 9 a.m. But that's a metric I'm going to be watching because there's a lot of metrics that are thrown out there right now that I don't think have as much of an effect on the broader economy that they're given the weight to. There's a lot of weight that's being put on a lot of these different metrics. And I think in a real economy, they just don't matter. And there's a lot of different ways that you can skew that data. In the same way that pollsters skew data during elections, you can skew that data to fit a narrative. And I think that's in my opinion, that's what we're seeing a lot of right now. And so if you ask me, I think the Fed is kind of, I agree with Jay here. They're being very reactive and not proactive. And that's because they're so obsessed with this soft landing idea. They're obsessed with having this soft landing. And instead, we're just having a slow bleed into the ground. Because we're getting to the point, and I've said this many times in our morning calls, we're getting to the point where October, I think we'll see everything sort of coming into a boil. I think that things will get kind of out of control here in October. And I think the markets will react in October as well. But if we are going to have any sort of recovery, we're going to see that in November and December. And I think it would be a pretty fantastic rally. I don't mean fantastic in a good way. I mean, just it'll be a sight to behold where we can have so much activity and so much volatility during those 2 months. I mean, I've seen things in these markets that would just shock you. And so we'll be playing this every single day here. It's the beauty of being a trader. We'll be here showing up every single day and seeing how much volatility there is in these markets and what we can take advantage of. Because whether it goes up or down, as long as there's volatility and movement, there's 100 points in the NASDAQ in the day, we're going to capitalize on those 100 points up or down. That's the beauty of these markets, the beauties of trading futures or trading index options. You're usually given a great opportunity at least one time a day. Some days you're going to have choppy action. Today, I'm expecting we're going to see choppier price action, but there will be, I think, at least one or two different opportunities. So in the Clubhouse tomorrow, we are having, I believe it's tomorrow or on Friday, we're having a second part follow-up to our order blocks webinar that we did that on Monday. So that's going to be a lot of fun. If you're interested in joining us in the Clubhouse, there's a link in the description down below. But yeah, it's going to be an exciting week. Today, I think, could be sleepy and docile. And I think that tomorrow and Friday will be interesting. Friday, we have the PMI that's coming out, the University of Michigan sentiment, which usually moves the market, Kansas City Fed services activity. And I think we have some, for you futures traders out there that are trading the grains, there's some stock report out for that. So we also have the wholesale inventories, retail inventories, and then we have Canada's. I always say that, Canada. We have Canada's July GDP. Good old Canada, my favorite country. We got Canada's July GDP coming out. Jay Quinn says, look at the last 4 Fed tightening cycles. They've always slowly raised rates over 2.5 years on average. And then when they realize they killed the economy, rates come down like falling off a cliff. Yeah, it's almost like it's engineered exactly to do that. And I'm going to try not to put on my tinfoil hat for this stream. But yeah, it would seem like it's almost engineered exactly to do that. But yeah. Most people are suggesting next summer for cuts to start. Yeah, they were. I mean, we were looking at much earlier spring cuts. And now with that SCP dot plot out now, it's painting a much different story, unfortunately. So higher for longer. But again, you know, with the Fed being how the Fed is, we can easily see things change in an instant. We do have the next FOMC, November 1st. I don't expect there to be a lot of commentary. I do think that we will see 25 basis points. But it would be, boy, it'd be interesting if they come out and they say that we've now reached the terminal rate. Which is what everybody's waiting for them to say. So, I mean, that's the expectation right now. If you're looking at the Fed funds futures rates, everybody's expecting now, I mean, a good percentage. It's weighted to that being the reality that we will see another 25 basis point hike here in November. So that meeting's going to be here sooner than later. I mean, we're already almost in October. This is the final week of September, final week of trade. And Friday is going to be the quarter end rebalance. That's Q3 out the door. And then we start Q4 come Monday. It's going to be exciting. So a lot of price action that's going to be there to trade in this near future. And I think that Q4 will give you a lot of opportunities. If you've never traded futures before, I mean, you're going to get spoiled by starting in Q4. But if you've never traded futures before, there is no better time to start than now. I mean, the best time to start was yesterday. But the second best time to start is today. And you can get started trading futures if you want to trade Top Step or Apex. There's links in the description right down below where you can find links for that to start. And it's a really great opportunity. I started trading futures years and years and years ago. And you had to, I mean, there's margin requirements and everything, depending on who you go with. There's brokerages like AMP where you have lower margin requirements. Ninja Trader even has lower margin requirements now. But if you're trading on something like TD, they require like the NQ. I think it's, you know, it's over $20,000 for a contract if you want to hold it overnight, I believe. But yeah, I mean, the barrier for entry now, if you wanted to start trading futures like Top Step, you can start trading for as low as $49, and you get data, platform, everything included. And the whole point of it is that you learn to trade futures with them, and then if you do well, they give you a funded account that you can actually take withdrawals from. So no better time to start learning futures. And this is for you small cap traders out there. If you've ever traded small caps before, if you're just a large caps trader, if you're trading crypto, there's no better time to trade futures than now. Obviously this morning, you know, we're in this choppy range here, right? We're just in this big choppy range here. No good trades here. But if you're looking from the move overnight here in the NQ, look at these lows here below 675. Let's just say that you nailed the low, that you got on that low level there of 675. And you took that thing all the way up to 775 and you traded 100 points there in the NQ. On just one contract on 100 points, that's a $2,000 profit. And with Top Step, they allow you to trade 15 contracts. So if you're trading 15 contracts on that whole move, that'd be a $30,000 profit. And that's with just one account. You can trade 3 accounts with Top Step. So if you're trading 3 accounts simultaneously, that'd be a $90,000 profit in that move from that 675 up to 775 there. Wow. And that's the kind of opportunity that you see in futures that comes all the time. That's the beauty of futures, is that you're seeing these opportunities not just once in a while, but you're seeing them all the time. We got about 8.5 minutes here until that data print. We'll see if it affects the markets. I wonder if Neil is done speaking here. Kashkari on CNBC here. I wonder if he's done. But yeah, morning like this, gives you a nice time to reflect and mark up your charts and look for any opportunities for the day. If we're looking at NQ here, I want to bring it into the, let's start with the 1 hour and bring this up here. If we're looking at the 1 hour here, and we do have a block right here. All right, we are kind of dumping. I'm actually going to bring this back into the 5 here. We are kind of dumping here. All right, we're coming down to that 46 level. See if we can get a trade here. Jim says 15 lot for the biggest Top Step account. No, I'm on the 50K, 49 a month. There's a 5 lot. Yeah, 15 lot is for the largest account. It's for the 150K account. Yeah, 5 lots is the largest for the 50K. So it's 5 lots for the 50, 10 lots for the 100, 15 lots for the 150K. That is correct. So yeah, seeing if we kind of have a little bit of a bounce here, if we're going to pierce on right through, maybe take a small trade here. Looking to see if this bottoms out. We got data in 6.5 minutes here, so it's really contingent upon if we see a bounce here. Really nice pull down on liquidity. I'm looking across the board here to see if any tech is rolling. We have, Meta rolling just a touch here. Apple's just been skirting along sideways here in most of the pre-market trade. We did have a gap up in Microsoft and Apple, huge gap up in the SPY. Not huge, but decent sized gap up there in the SPY. We are confidently below that 46 now. I could take a short here, risking just above 46. Take a little flyer here, but let's see if we bounce. I would love to see a bounce back up to 46 and then weakness, and then I could hit that weakness. But if we bounce and we see strength, I'd want to see it get back above the 50s. So let's see here. It's still weak. I'm going to take a short. I'm going to risk right there. Move my risk there. So we're targeting 28 to the downside here. So short NQ average of 742 flat here. I think it's just getting slammed. Microsoft is kind of off of a cliff here. I want to see if we can nail an add on a weak bounce. I got my stop pretty tight. I'm going to move that to 48 3/4. So just above that 46 3/4, 2 handles above that. So let's see if this has any kind of weak bounce potential here. Got to keep an eye on the news too coming out in less than 5 minutes. Still looking a little bit weak here. Watching closely. I like where my stop's at too, 48 3/4, because if this turns up and it reclaims 48, I want to get tapped out there. So let's see if this turns into a little bit of a weak bounce here. Just looking across the board. Showing a little weakness here. Watching on that little rip back up to the top side. This is generally where I'd be looking for my add here. Second lot on this position. I'm going to do a second lot right there. And again, keeping my stop right where it is. Pretty tight stop. Data out in 3 minutes here. So we are short NASDAQ, 743.25 average. Very tight stop, looking for us to remain weak below 746.75 here. Getting a little bit sideways. Would add a third lot on a flush below 40. Okay, stopped out there. We'll see if this sets back up. If it was just doing a wick above that 46.75 here. Which it kind of looks like it did. Stop might have been just a little bit too tight. You can see right here, we got wicked out right at the very top of that wick there. But let's see. Let's be patient and wait. Might have to wait for that news. We got the release in less than 2 minutes, so definitely going to be waiting for that news here. Unless we see tremendous weakness on this bounce. Because right now it looks like it's just wicking right back above that level. And if we see weakness persist, I could easily see this flushing right back down through 46.75. So just watching here. Yeah, we're in a precarious situation here where we have that news right about to come out. And I'm thinking that this is going to come right back down here with the way that this price action is just traded. We have the Czech Republic coming out with a rate decision as well. That's not going to really affect the markets all too much. So yeah, we had a wick down from Microsoft and Apple. And now they've just retained that wick back to the upside. So just watching here. See what it does around this 50. I think 50 is going to get stuffed. Less than 30 seconds here till that data comes out. Let's see what that reaction is on the print. And then hopefully we get some nice volatility to trade here. Okay, 5 seconds till that data. Let's see what happens here. Oof, there's that flush. Durables at plus 0.2%, which is higher than the negative 0.5%. Have to be worried about this volatility here, but does look very weak. Big chunky weakness here. I want to see this weak below the 40s. See if we get this sweep down to 28. Big chunky flush down. Watching here, I want to see weakness below the 40s. If it whips back up, it could definitely stop us out here. Watching here. Yeah, big stop out there. So it wicked below and then it wicked right back up. On news plays, it could be extremely volatile about this. So I was hoping that we'd see that flush right down to 28.5. But unfortunately, we got stopped out there. So watching to see if we have one final setup here. Very volatile on that print. Watching here around these 50s again. Hey, good morning, Chewy. So seeing if this 50 is still weak here. Definitely a big stop sweep there to the top side. Watching closely here. Yeah, there was a big whip. That was about a 20 handle whip back up to the top side there. So watching here, seeing if we have weakness because we're encroaching right here into that area where we had seen selling from earlier. So watching closely at this 50 level is showing a little strength. Give this some room here. We do see Microsoft and Apple perking up a little bit here as well. I want to see what this does towards the 60s here. It is showing some strength. As long as we can maintain strength above the 60s. Watching here now, point of control. Right at the VWAP. Could get very squeezy. Morning, Papa Bull. Okay, let's see if we can remain strong through the 60s here. Watching right here. I'm going to bring my stop up pretty tight. Right there. So squeeze target to the top side would be that 78 level. Watching for an ad here. Microsoft running in the VWAP, but let's see if we can get extension above that a little bit. So we're squeezing out above that that block too as well. So I want to see strength above that again, targeting 78 to the top side here. So watching this pullback. Microsoft confidently through the VWAP as well. Let's see if we can hold above the VWAP here. We'll be watching low 60s for a potential ad. I do like it that it's holding this mid 60 area as well. So I'll go full size here. Looking for that pull up to 78 now. So break into the 70s and a pull into 78 is what I'm looking for. There's your 70 test. Get a fill right there. Another fill. All right, we'll get our final three running here. Stop at break even. Didn't get that confident push through the 70s that I wanted. So I want to see a push right up to 78 here. See if we can get this to hold. There's a little pop. Watching closely here. Oh, stopped out. All right, well, that was a good second trade. Got the momentum there to the top side. I wanted that pull all the way up to 78, but we ran into a little bit of softness there to the top side. So we were quick to react to that one. Nice trade on that one, but I really wanted to see that cleaner pull up to 78. So you can see here we were layering that out to the top side there. You have to be concerned too, right here on your chart, as it's coming up to this area right here. You have to be concerned that, you know, when we see these topping wicks right here on the 5, that to me is kind of telling me that I need to be exiting that position. That's why we're feathering out there at the top side. So that puts us at, on the day here, slightly down. Let's see here, go to Ninja Trader. 91 bucks in the red there. So nice bounce back from that first trade where we were right here. Nice little bounce back there. Looking for a third trade to set up here. But as we are higher here, the confidence I have is kind of waning, because if we get a pull to 78, then we kind of get a retest here. So if we get up to 78, then we're looking to see whether or not we hit that with weakness, or if we punch on through that. And if we punch on through that, then, you know, then we have a potential 20 handle trade from 78 to 98. We are holding this area here. And we are still holding this area with strength. I could take a flyer on this, risking below, I'd say 63. But the risk to reward on this one is a little bit lower than what we saw in that nice momentum pull to the top side there on the last trade. So I think I'm going to sit on my hands for a second here. See, there's that pull down. I'm just also watching Bookmap too. So we're seeing that pull down there and that reject. So if this holds strong in the low 60s, potentially we'll take along with the idea that we're going to approach that 78 target. Watching closely here. And then, you know, the biggest, the highest odds are that we just kind of end up staying in that pocket of liquidity. That's why I'm kind of pacing myself here for this next trade. That is the highest probabilistic chance that we kind of retain in this pocket of liquidity here, because that's been the defining liquidity for almost 3 hours. And until we get more participants in the market, it's harder to break free of that liquidity. So, I mean, what just happened there was we got caught in the stop run to the downside. I was hoping for that. I was judging that we would have seen on that tape that flush down to 28, but we see kind of the same thing. We're seeing these little gaps, about the same size gaps in between up and down. So they did kind of a stop run both ways. So just a liquidity pull and then finding ourselves back in the home of liquidity right here. So that might have been the only setup there. Unfortunately, we got juked to the downside on that one, but made the recovery on the bounce back up to the upside there. So we shall see if there's any opportunities here. It pulled down just a touch below the 60s. Now we're kind of bouncing back up here. It does make it difficult when you're trading a low liquid market. Right now, NQ is, well, NQ on its own. There's not a lot of banks and huge funds that trade NQ. If you compare it to the ES, there's a lot more funds and banks that trade the ES. So NQ inherently is already a low liquid product. But during regular trading hours, you have the most amount of liquidity during New York trading hours. And outside of that, you're going to have these lower liquidity moves. And all it takes is one single player to come along and just change the whole direction of the tape. So you run a risk. Obviously, market structure still works during these times. But after you kind of do what the move was, in this case, stop run to the downside, stop run to the upside, you tend to have a lower probabilistic chance here. Jay Quinn got a nibble. Nice work there, Jay. Well done. Great trading. So yeah, we might just be hands off here for the rest of the stream. I just want to keep a watch here. Yeah, when we have it kind of doing these moves like that and coming back down, you can see here this is a clearly defined area of liquidity that we've been transacting volume. You can see here on the volume profile here on the side, you can see there's a lot of liquidity that's been offered here, as well as this pocket down here. So I could see us kind of jumping between these two areas here and here in the next, well, we have the market opening in less than an hour. So say in the next 30 minutes or so, probably pretty light on liquidity. To give you some color on the news print here, we had the preliminary durable goods orders, like I said, coming in at 0.2% positive versus a negative 0.5% estimate. The Czech central bank left their 2-week repurchase rate unchanged at 7%. And we had the capital goods orders out at 0.9% versus a 0.1%. So much hotter print in the preliminary durable goods orders. Much hotter print than what we were expecting. And that's why we saw that initial downtick in the market right here. That was the initial reaction, but it ended up being a stop run there. And we had Microsoft shooting up to the top side, as well as Apple. Microsoft and Apple are both the number 1 and 2 weight of the S&P and the NDX, the NQ. So they can definitely move the market there. So yeah, that's probably going to do it for me in the way of trades here. I'm just watching again this area of liquidity. If we have a piercing of liquidity, so if we were to raise up to the top side, we go back up to 78, we get a test at 78 and we show some weakness, I'd be happy to hit that short. If we go up to 78 and we see strength there, I'd be happy to take a small scalp with a tight stop, looking for maybe like an 88 target or something like that, maybe 10 handles. If it comes back up to 78 and comes back down, looking for a short, coming back into the zone of liquidity. So 78 to about 68, another 10 handles. If we flush below the 50s here and we're tapping 46, looking for a bounce from 46 back up into the pocket of liquidity, 46 to 56, 10 handles. And then if we're at 46 and we're cratering to the downside, looking for 46 to about 36 to 30. So a bigger downside move there if we were to break below 46. And why is there a bigger downside move in this? Well, so if we're looking at the liquidity here, the fact of the matter is that if we were to flush back down through 46, we've been entertaining a lot of liquidity up here in this area, and a hard reject of that, saying that we don't have buyers up here anymore, would be pretty savvy for downside traders, bear traders, short traders to take this to the downside, and they'd be heavy on that because the market's seeking liquidity. If we're spending a lot of time up here, right now we're up in this upper area of the liquidity pocket. If we are not finding any buyers or anybody who wants to transact contracts at this area, the market will seek liquidity, and it will show that, that it can't find liquidity up here, so it has to seek it lower. So if we're actually piercing through 46 here, the liquidity that's being offered below 46 is going to get very, very active down there. So the longer we spend in the higher area without entertaining higher pushes, more likely it is that the market's going to seek liquidity lower. It's as with anything. There's supply and demand in all markets. If you have a lot of a product and nobody's interested in buying it at a high price, they're going to bring the prices lower. This is just auction theory. This is how these things work. A lot of folks out there, they're traders. They've been trading for years. They don't even think about the auction concept and what they're actually trading underneath it all. I do recommend a couple books in the Clubhouse we talk about. Mind Over Markets is one of them. Talks about auction theory. It's Dalton's teachings. And if you're a futures trader, I highly recommend it. It's definitely worth sinking your teeth into, giving that a good read. It's one of those books where it takes 5 minutes to get through one single page because it's just jam-packed full of information. Highly recommend that. Dalton's books are great. So yeah, we're coming back down a little bit here. So yeah, not looking like I'm going to take any more trades because we're just not seeing a super volatile move by any means. So we're at $91 in the red today, basically a scratch day. Had a swoop down where I think we had about 4 lots there. We got stopped out. I think it was 2 trades. Yeah, so we had 2 trades that lost here. This trade right here, and we got stopped out. And I took that sweeping liquidity low, and then it spiked right back up. We got caught in that stop run to the downside, and then we took it to the long side here, and that's where we made back what we had on those 2 losing trades. So it worked out. We had some really nice exits there. The hourly high, 74.5. I was looking for that push through 74.5 to go up to 78. Didn't quite get that. 74 was the now hourly high, but we were looking for that 78 push. But unfortunately, we did not get that. So we will live to trade another day. We'll be back tomorrow, of course. We're here every single morning at 8 a.m. And if you are here, you are enjoying what we're doing here on the stream, you can show your appreciation by clicking that thumbs up button. It's right down there. It's free to do. And make sure you're subscribed to the stream. It's also free to do. Make sure you have your notifications bell turned on, because if you do that, you can get a notification pushed right to your phone, and it'll let you know, and it'll say, hey, Market Clubhouse is live right now. Rips is live, and he's probably trading right now. And if you want to watch trading, I think it's a great time to tune in and check it out. So yeah, just before I go here, just want to make sure that there's no trades, because now we are perking back above the 70s. But yeah, it's looking like, I'm just watching the book map here. When it perks up into these key levels and you see these large bubbles like that, that's usually people on the ask that are trying to hold the price there, or they think it's a good value to dump their contracts that they have there. But there's a lot of forceful pushing that's going on there. And so you need to take that and pair it with the context of what's going on in the situation. Look at the other assets that are making up the NQ. In this case, we have Tesla, Meta, Nvidia starting to perk up a little bit right here. But yeah, I don't think I'm going to stick around for a scalp for, an 8-point scalp here to the top side. All right, folks, let's see here. How many likes did we get here? Did we get over 30? Oh, we're so close. 33 of you in here. We got 26. I'll take it. Hey, it's close enough, right? All right, folks. Well, I'm going to be locking it up here. A very, very fun stream to have with you guys. We're on the wrong side of the newsprint. Again, just to reiterate, we're on the wrong side of the newsprint here. We ended up chasing it to the downside, got stopped out to the top side there. But then we ended up doing really well back up on that reflex trade there to the top side. And we didn't get greedy. We were exiting our position into that final push there, and we almost top ticked it there. We at least top ticked that 30-second candle right there, so pretty close to top ticking it. But yep, that's going to do it for me. I will be back tomorrow for Thursday's stream, and also Friday, and we'll be back here at 8 a.m. Eastern Time. Same channel. You can catch us right here. And again, if you are enjoying this, just like and subscribe. Really appreciate it. I will stream Bookmap throughout the rest of the day here. And what that's going to look like here is that I will have Bookmap full screen just like this. So if you have a second monitor where you want to follow along, you can keep that in another monitor off to the side there and have Bookmap streaming for you all day. And you can be watching what I'm watching throughout the day. All right, folks, I hope you all have a great trading day out there. Remember, very low amount of data coming out today. That was pretty much the important data prints of the day. There's not any more Fed speakers that I know of that are scheduled to speak today. So today could be very tight, but focus on the market structure today to guide your trades. And I think that you'll have a successful day if you do so. And just remember, it's Wednesday, middle of the week. We still got Thursday and Friday, which are going to be action-packed. And you want to save your energy and save your capital for those days where we're going to have maximum volatility. And quarter end rebalance on Friday is going to be a doozy. So let's pace ourselves. But good luck out there and have a great trading day. And I'll see you all tomorrow here on YouTube.